Morning, guys. Can everyone hear us? I think we can. Okay. Okay. All right, guys. Blog this morning that Eric wrote. Basically, the theme was confidence in your trading. The biggest key to this is repetition and preparation. Knowing what you want to do before you do it. Basically, have a game plan, then react. Don't get into a trade, then try to decide where my out is, then try to react, because those split seconds, fractions of seconds, can make or break your days, your weeks. By having a game plan, you'll stop any hesitation that you might have. This all builds on confidence. The repetition comes from obvious experience, getting in and out of trades, but the preparation is knowing your ins, your outs. You know, a lot of setups here, you know what your ins are, that they're fed to you. You just have to be quick enough to get in them. How are you going to be quick enough? By having confidence, knowing that trade is going to go 20 cents. How do you get out of them? How do you know what the high is? You don't know the high or the low. Eric used the example as RIM. I'll use the example, Frank Delaney this morning traded some futures off a GDP number. What did he have? He had a game plan going in. All right. He didn't try to get when he got out. He was a long position. He didn't try to get the highs, but he knew what was stretched. He had a game plan in the back of his head, what his out was. And I guarantee you, if he was wrong on the trade, he had a game plan where he was going to get out. So that's the key. Does anyone want to touch on any of this? Eric, you want to say anything about this?
No.
I mean, I know a lot of the key, guys, is the preparation to the trades. You know, that's it. Going through these lists, going through knowing the earnings, looking at a chart. You'll hear Eric preach day in and day out, a quick out. If I'm not right, I'm getting out. All right, and that's, you know, yesterday I got caught in a trade yesterday because I just missed the out. It was I had a game plan, but I missed it. Sometimes that's going to happen. But
that's the part you want to touch on.
Go ahead.
So if we're getting in, I use the example of RIM in there, but it can be anything. It can be AIG, any major stock. A lot of times, if we see, let's say, AIG's got 100,000 shares bid, and you want to hit the bid, you don't wait until you see 1,000 shares. If it's beginning to tick down and the bid's beginning to evaporate, you hit it. Like if there's 40, 30,000 shares as it's going down,
Mm-hmm.
you wait till the last possible second because you just want to absolutely make sure, more often than not, you're not going to get it.
okay. Guys, Asia yesterday, I guess, followed our lead, was down 2%-ish.
Yeah.
Oil rallying a little now, up about $1. Gold rallying a little. GDP report was good, like we said. Futures are a little off their highs. You know, you go back to a few things in this market. I mean, Art Cashin was on TV before talking about the 80-year anniversary of 1929. He was talking big on the dollar and how key that is. And he was saying that he thought if it spiked yesterday, we were on a little cliff and we could have fell 800 points. He believed that the initial claims with unemployment could lead to a poor Christmas. This morning it doesn't look that. We're still on that slope, but we're looking better here, like we kind of fought it off. Positive story about AIG in the Wall Street Journal, but then coming back to it, Exxon missed, First Solar missed last night. I don't know. Personally, I think if there's any strength after the opening today, they'll probably sell into them. Eric, you want to say anything?
Yeah, I agree. They'll probably sell into a little bit, but the strength or lack thereof of that selling pressure, that's going to let us know what is going on the rest of the day. There's a lot of people who are short right now, a little bit longer term if they're swing traders, and if we don't initially break and keep going, they're going to begin covering.
Okay.
You know, a lot of the GDP run this morning, there's a lot of people who got caught short. I mean, Frank kept noting as he was in that position, there's a guy on TV who flat out was short futures.
Yeah.
So he was talking out of emotion, as Frank noted, and this is what happened. So the guy had to panic. He got out. He probably took a massive loss. Probably lost this week. And there's a lot of people in that position. So if we don't sell off pretty hard initially, the strength is probably going to hold and actually reverse trend and build a little bit.
Guys, Rob Smith got into a bicycle accident last night. So I think he posted something today. I didn't get around to looking at it yet.
It's on his website.
Okay, he's on his website in the black.
Smith's in the black.
Brendan said in the black and blue.
Yeah, he's in the black and blue.
today.
So hopefully he'll be okay. I think he will. Frank Delaney, you want to say anything today about the markets?
Trying to think. Natural gas report at 10:30. Not a lot. You guys said it all.
Okay. How about the guy to your right? The other right.
The other right?
What does he have to say?
Keenan?
Yeah.
Bob, you got anything to say today? Hello. Hello.
Keenan loves him. Guys, obviously the Yankees got Cliff Lee last night, but they're looking to pounce on old Pedro Martinez tonight. I'm looking for an 8-6 game. Burnett will have his usual. He'll give up 4 or 5 and walk too many. Anything?
That was
Like I said.
That was hard. Well, listen to me. He's a great pitcher. He won the Cy Young last year. He totally baffled them. They have to bounce back tonight. I'm thinking A-Rod's going to have a big night. There you go.
The hell with Philly and half the Jersey.
Okay. Guys, I just want to...
But, okay.
No, I just get back to stocks. Somebody just asked me something about stocks to avoid. For some guys that are newer trading or whatever. It's not to avoid stocks. It's just like yesterday, stocks like Apollo that are very historically thin and they're difficult to trade. And I'll get back to this. Anyone can trade a winning trade. The worst case scenario is you have a flat and you should have made money or you make a little money. But when you're in these stocks, First Solar's down 20 or 30 points today or whatever, you're in these higher priced thin stocks. There could be spreads in them, dime, 20 cents, 30 cents. If you're newer at this or you're just not comfortable playing them, don't play them. Okay, you can watch them, or if you do trade them really small, because you know if you have to get in or out of these stocks with the press of a button, you're going to pay up, and it's just not fun. It's not going to make for an enjoyable day.
Yesterday we had a couple of people, but one person in particular that I noticed his position. And then I tried to get in touch with them, for one, and couldn't. If you're trading with Epiphany Trading, and we can't get in touch with you, and you have a position, there's a chance that we might get you out of that trade, for one. Number two is that if you, like Tim said earlier, if you enter into a trade, know where you're getting out. And some people have, in this particular case yesterday, someone was giving the APOL a chance. We don't give stocks chances. If we're wrong, we get out. We can always. You're better off focusing your attention and energy on a position or finding a trade that you could do well on, instead of wasting half your day feeling miserable holding on to a stock. So, with that said. It's getting close to the bell. Is it a wrap?
I think it's a wrap. Anyone else? That's it. Bruce, anything?
Not really, just
All right.
hopefully we'll be a little busy today and have some opportunities to make some money.
Get busy.
It's your word, Bruce's words of wisdom. Make some money. Let's go.